Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iaccino, who will be on shortly. That's why we are starting early on midterm election day. Hey, waka waka. Yes, obviously I am early today. Thank you for tuning in. I did also put it on the Discord server that I would be starting early. So if you're not a member of that, you should consider joining because it's worth the one-time fee for just to find out when I'm going to be coming on early or doing a special video. Good morning, Rams of Fall. How are you? Going to be quieter? Well, we're letting some people come in since, again, starting early. Hope everyone had a wonderful evening, slept well, and are prepared for another trading day. Just a reminder for everybody who is not in the USA, it is election day here, which will most likely have an impact for the next little while on the markets. We will get Bob's take, though. I already gave my take over the last couple days. I'll recap it. If the Republicans win, I think there will be an upward bias. Okay. Oh boy, numbers just coming out. Red book. Well, that is not inflation adjusted either. That is a pretty drop from previous. I think the consumer's going to tap out sooner rather than later. So things are not going to look good for first quarter. But we still have the election. By the way, there's not much going on today. Besides the election, minor is the Investors Business Daily, economic optimism coming out in 5 minutes, or 3 minutes. And then it's quiet. It's quiet, so we'll get exit polls later in the day, and it's not going to be decided though. A lot of stuff they're already prepping it, like, oh, you might see this, you might see a red wave that could be reversed over the next few days as we're counting a bunch of ballots that we're going to find under the bed. I don't know about that finding it under the bed part, but we will see. Tesla taking a hit. Well, the chief twit I don't think is doing any help for Tesla, and we can take a look at that too. Out with old crooks, in with new crooks. Exactly. As I said yesterday, where's my GTFO vote? I want them, most of them, over 95% to GTFO. So, good morning, Gary. Yes, lift does need a lift. Very good. Thank you for being here, everybody, as we tune in. Now I can get started. Sort of a quiet mixed market. Tesla getting beat up a little pre-market. Apple and Microsoft up a bit. Your mega caps are up a bit. All about the same. Semis are up also. Oil, slight little pause to pullback area. You can see energy down a bit. Technology is up a bit. And that's about it. Sort of a mixed market. I'm expecting a quieter market today, but who knows? Who knows? 50-50 odds for the next rate hike. Fear and greed still in greed. Earnings this morning, we had DuPont with a decent gap up. And I forgot to look at Party City. Oh, well. After the close, separate from election stuff, we got Disney. Gonna pay attention to that. Also, Disney could influence. I know there's a number of people who play Netflix on this channel. So Disney, it could influence your Netflix. AMC in the toilet, but I wonder if some apes are still watching. I'll have to check in on Lucid. The most important one for me, besides Disney, is Affirm. Why? Not from a stock perspective, but from a consumer perspective. And if there is more, getting to more charge-offs, how credit usage is going. So that's where we sit, and I will be back this afternoon. Let's peek at Tesla real quick. Oh boy. Now, see, longer term. Next target area. We are breaking below key support. Not quite there. 194 is my next target. You can go off of 192, 190. See here, we have a little target area. If you want conservative targets, it'd be about 192 to 194. You start getting a close through these wicks. You are into a clear path weekly move. And right in front of that, we have the 62.5 harmonic. A weekly close above that would not be good because it'd also be a weekly close below the 200. Weekly, I do expect a bounce in this area. Okay, but longer term, I know a bunch of people will disagree with me. However, we shall see. Little area, really 194 to 192, and then 188. Or those are the minor areas, and then more on a breakdown 180, and that's just not necessary for today. Coco's hoping Elon goes bankrupt. Gary's long dash. Why such a hater, Coco? Oh, that'll be $8. $8. Where's my $8? All right. So, S&P, little, but this is interesting. Had the harmonic area up here, 3830, stalling out there. We have this level up from last night, this 37.98, 37.99. We have a little mini double within a double. Mini double within a double. So, possible breakdown into the open 38.18. I'm expecting a choppier day. So, be prepared for reversals. 38.12, 38.09, 38.06. And then the bigger double is a close, which would have to happen on the 1 or 4 hour below 3,800. 37.86, 37.79 are the two major key targets. And then the last one's 37.72. Then none of those have to trigger. To the upside, the little minor breakout level is 38.45, 38.44 area. And it's still got the upward bias with the first cross the rotation zone. And that is against the bigger, this little bigger double. That's the major breakdown. I guess it's 38.44. Sorry, it's not 38.45. But you have a stair-step move higher. This is where it can get a little challenging into this area. Yes, it is a daily clear path, but you got to check the one time frame lower, which is 4 hours, and you see target, target, target. There is also a lot of volume behind this, which can lead to substantially choppier price action. So please keep that in mind. Let me switch cameras real quick since I'm over on my charts. Elon's a compulsive liar. He doesn't lie about anything. He's just ambitious with his statements, like taking it private, like the solar roof, like the battery swap. Come on, like self-driving, which has been around for years. Promised. I should say promised. So, he's just ambitious. Come on, guys. Oh, you like that Better Off Dead? Fantastic movie, isn't Better Off Dead? I was wondering. And it's a sort of a Elon tie-in to Better Off Dead. Where's my $2? $2! Fantastic movie. Hey, guess what, everyone? Before I bring on the one, the only, everyone's waiting to see, please do consider subscribing, ringing that bell, and hitting the like button. I'm just going to get straight to bringing on Bob. We were already making the Better Off Dead references, Bob.
Better Off Dead? What do you mean?
The old Cusack movie.
What?
Better Off Dead, the John Cusack movie from, when was that? That was like the early 80s.
Yeah, that's my era. I'm not sure what Oh, Ramsfell's talking about Camaros. I've had
Yeah.
one, two, three Camaros, and I'm looking at another one right now. To be honest, I love that. I've always loved that car.
Look up the Camaro at the end of Better Off Dead is beautiful. Yes.
Right. I still want one
So
of those frickin' screaming chicken Trans Ams, but I don't know if I'm going to find a reliable one at this point.
no, you. Oh yeah, that's the problem. See,
I know.
if I was gonna buy a Trans Am, it'd have to go. I'd have to go early. I'd have to do a 70. I would have to do a 70.
Wow,
So
it's a bold call.
before the Flamin' Chicken.
I
Can you
love the
say
flame.
Flamin' Chicken anymore? Is that
Yeah,
okay?
that thing is okay. I love the flaming chicken. That's my favorite.
All right. Ramsey Falls going for the
Smokey and the Bandit
67
one.
RSSS.
Smokey and the Bandit one. That's the one I want.
You want the 77?
Yeah.
Okay. Well, there we
Six,
go.
6.2. All right. Go ahead.
Oh boy. I all right, Ramsey Falls in 11 seconds. I had a 68 Camaro SS that turned in the 10-9 with slicks. It was a 396 board, 20 over, 10.5 to 1 compression ratio. It was nice. But we're getting sidetracked. What is most important today, Bob? What's going on in the markets today? What do you expect with the election? What's the impact on the markets since we don't know when you'll be on again this week? Let's get the take from you.
Well, I think crude oil. I really am watching crude oil back up in the 90s. OPEC is now saying the market's back to balance. So that tells us two things: that OPEC wants crude oil 90 or higher. The energy minister from Oman said that it's foolish to assume renewables can meet global demand. And the Saudi minister said that, and I think we know that, but the Saudi oil minister said that they can respond if prices get too high, which I thought was interesting. So the real target date for that is early December, when there's either going to be price caps or the Russian crude comes off the market. There's a lot of things that happen in early December that can affect crude oil. But I really think they're kind of primed to spike. My longer term case has been 65 before 105, and I'm kind of changing that now. I think 105 before 65 is more likely. A lot of people would say, oh, yeah, it's a big, bold call now that we're in the 90s. But, the price action has to tell you where things have gone. And until the price action changed for me, I wasn't going to change. So if you watch the podcast 2 weeks ago, which, by the way, this past week, due to some personal issues, I've been slow in getting it posted, but I'm getting it posted probably later this morning, and it's the Mike Arnold edition. Um, I'm still long crude oil from 2 weeks ago. So that's where my position is. In terms of the obvious, the midterms, I think there's very little chance that stocks don't rally after the midterms. First of all, historically, they rally after these particular midterms. There's only one set of midterms, right? It's the second year of a presidency.
Mm-hmm.
So markets tend to rally a very high percentage of the time after midterms. There's only one president that didn't lose seats, and that was W. And that had to do as much with 9/11, I think. As a matter of fact, the Republicans gained seats in that midterm, and I think it has as much to do with 9/11 as anything. But I think if there is not as big of a red wave, and all of a sudden we immediately start seeing just an absolute rush of lawsuits about the election integrity, that can possibly hit the markets. If for some reason the Republicans don't win the House, I think the markets collapse. And I just don't think the likelihood of any of that is high. So I stick with my bullish call in the equities, and I think crude oil is kind of critical to watch post midterms, because if anything, it's going to push inflation back to levels that makes everybody uncomfortable. It's going to be commodities, and it's going to be led by crude oil.
Well, also we do have the big. So, all right, let's just recap. If the unless the Republicans get don't take the House, uh, it's probably an upward bias from your perspective. It
Yes.
now separate from that, you mentioned inflation. We got CPI numbers on Thursday.
Yep.
What's your since you probably won't be on again before CPI numbers? What's your take? Do you think what's your take on CPI?
Um, I think CPI will be weak, relatively speaking. Actually, let me just completely rephrase the way I said that. I think CPI will be in consumer friendly. They're expecting the month over month core to be up zero point 0.5. It was up zero point 0.6 last. I think we're going to get about an up 0.4. Um, I don't think that's good news if you're looking at it in a realistic economic sense, but I think it's going to be good news for equity markets. I think the year over year probably come in as predicted, right around 8%. The year over year core inflation, again, with those two particular numbers, the year over year, we're starting to get the base effects slowly leak in to the year over year. I think the headline inflation month over month could be a little hot, only because there's been a slight boost in food prices over the last month or so with grains mostly, but that's all kind of washed back. We got a bump up in the ag markets when Russia said they were going to leave the grain deal, and that would be in this particular set of CPI numbers. So I think food could bump up the month over month headline figure. So I think it's going to be mixed, but overall, look, right now the equity markets are looking for reasons to rally. So unless something is preposterously bearish, it's likely to be kind of brushed aside. So now preposterously bearish would be a core inflation rate at about zero point 0.7 month over month. 0.7, zero point 0.8, that would be preposterously bearish. So, but I don't think we're going to get that.
So you think short term there's still there people are looking for the good news to buy the market, still looking up for, as you said, fourth quarter. And then Paul's in here with a question. Thank you for putting the question mark there, Paul. Do you think the market still rolls over to new lows next year, even if the Republicans take the House and the Senate?
I do, because it's an earnings story to me. So we're starting to see earnings roll over. As a matter of fact, I tweeted something yesterday, and let me pull it up. I've had some, and Mike knows this. I've had some personal stuff going on with a very close relative, so I've been kind of on and off on the markets. But let me find what I tweeted yesterday because I thought it was important. It was from FactSet, which I watch really closely during the earnings season. S&P 500 now projected to report a year-over-year decline in earnings in Q4. We'll be getting that in Q1 next year. So if FactSet is right, it's going to be the first decline in earnings in quite some time. So we'll be pricing that in the beginning of next year before earnings begin. Okay, so it's now forecasting a down 1%, a year-over-year earnings decline. So again, we haven't had that since. I'm skimming the article. I'm going to guess somewhere around 2017, 2016, but I could be wrong about that. We haven't had it in a long time. Oh, here's the chart. I'm going to send you the chart, Mike.
Okay.
It's just easier to copy and put it in a text. I'll send you the chart right now, what the past was and what the predictions are. So that's kind of why I think that, and I've been saying this, that this isn't the bad earnings season, right? It's not this one, even though earnings have not been great on the tech side, right? This is not the bad earnings season. It's Q4 that's going to be the bad earnings season.
There's the chart.
Mm-hmm.
So
There's
Q3,
a slight negative right there.
we're here, right here.
Yeah. So what do you have to go back to see the last negative quarters? Was that pandemic?
Yep, that was Q2 and Q1, Q2, and Q3 of 20.
Yeah. So
I think this is overly optimistic going with Q1 and Q2 earnings, but
I think you're right.
so we shall see. I mean, it would be rare unless the Fed goes on massive easing to just see one down quarter.
Right.
But we shall see. Let's. What else? Any thoughts on where we sit with notes, bonds, bills, anything else?
Well, yields are creeping back up. You remember post Fed speak, or I should say post Powell press conference, the 2 year got up to 480 briefly. We're 471 again. So we were creeping up. I didn't look at the settlement from yesterday, but I do remember, like, here, let me pull it up. Um, so I think bond yields keep creeping back up. Yeah, yesterday we were as high as 472 intraday. Let's see where we settled them yesterday. Maybe it's even a little bit higher than that because, again, I'm a little got a lot going on in the family life right now, so I'm not as on it as I normally am. I just complimented myself. I don't know if you guys caught that. Um, Normally, I'm just on top of this stuff minute to minute. Yeah, the settlement yesterday, 480. No, that's not the 3 month. I'm sorry. I mean, yeah, that's the 2 year. Settlement yesterday, 480. So we briefly got there post during the FOMC press conference, and then we dropped back down. And yesterday's settlement, we got back there. So I'm sorry, that was the 1 year. So 472 was a settlement yesterday on the 2 year. Right now we're 470 as I'm looking at it right now. 2 years 471. So I would think yields keep going higher in the short to medium term. I don't think there's anything. The most optimistic midterm prediction for Republicans for red wave I heard was picking up seats in Congress. I don't remember I'm sorry, picking up seats in the House. I don't remember the number because everybody basically, that's almost a foregone conclusion, but getting to 56 Senate seats. Now, this was a red guy on Fox News who said that. So take that for what it's worth. But that would likely drive markets higher, quite a bit higher. And the reason I say that is because of the gridlock that would come with it. So the gridlock that would come with it would mean fiscal spending is now grinding to a halt, which would help the inflation picture.
Gotcha. Sterling had a question in here. Looking at the natural gas chart, the last time there was this much volatility was back in 2008. Is there any correlation between natural gas and recessionary pressures, or was there something else driving it back then?
No, 2008 was, there were a lot of commodity firms that were going under. And so a lot of the volatility in 2008, you have to go back to the crisis, the Great Recession, causing it. But natural gas does weaken during recessions because businesses close. So, like, if you look at natural gas during the pandemic, you'll see weakness, right? So obviously a business that's not open does not need to run their heat, right? So there's just a natural correlation there. But at the end of the day, weather drives natural gas more than anything else. And we obviously had the supply issues of natural gas. Europe, specifically Germany, but Europe in general, their reserves are capped off, unlike our strategic petroleum reserves. Their natural gas reserves are now topped off. They're at their maximum levels, so they can make it through the winter. So the European volatility is gone from there. We've now got weather volatility. And then, you wouldn't see sterling, the natural gas contract, reacting now to recessionary pressures because there's still an argument as to whether we're in a recession or going into a recession anytime soon. So you wouldn't see that just now. It's more about the unseasonably volatile weather, which everybody blames on global climate, but has happened historically every like 25 years. But whatever.
What any take on dollar index, which is still in a trading range but pulled back substantially the last couple days?
I'm seeing some short to medium term weakness in the future, in the next, say, let's call it 2 to 3 weeks. And a lot of it having to do with the Fed's plans being out there and the potential for again, the midterms to go red, the stop of fiscal spending, the Fed to back off, but yet you've still got ridiculously high inflation in other countries, whether it's Australia, whether it's the EU, China had big inflation numbers. Um, Japan's inflation is running above 2%. When was the last time you saw that? So I think you're going to see some pullback in the dollar. I could see the dollar pulling back. Mike's got a harmonic on the bottom there. I could easily see that move.
No, this
That
is
would
a.
be
We actually have a confirmed but not triggered double on the weekly. We had a triggered double
plus
on the
extensions.
daily.
So those are the measured move targets.
Yep,
Yeah, I
that's
could
it. It was
completely. I
confirmed and triggered
completely
on
see
the
that.
daily. Did not came to the stop level. Did not close above the stop level and rolled back over. So, uh, what else do we have? What other? Before I get to some other questions, what other things interest you for the next couple days? Anything?
And that's honestly it. CPI. By the way, I mean Fed speak starts again in earnest,
It
right?
started already. I mean, it.
Yeah, we had three yesterday, right? We had Collins, we had Barkin, and I think we had Mester. I don't remember seeing any headlines. Again, I got other things going on right now, but I don't remember seeing any big headlines.
No, there
But we
weren't
got
any.
but we got more today. You can actually get a little bit of a clue, Mikey, from whether they're addressing things or not, right? So if all of a sudden they start addressing monetary policy aggressively, like they did prior to this last meeting, um, you could take a cue from that. But right now, I don't. If they're not addressing it, then they don't know. They're literally in flux, which they weren't in flux before the last meeting. Yeah, it's very much like refinery utilization, that people ignore refinery utilization in terms of crude oil pricing. Um, the Fed speak's a very big indicator of what the Fed's going to do next, especially uh, concerted Fed speech, collaborative Fed speech. When they act like OPEC, where they're all saying the same thing, you can gather from that what's going to happen next. I mean, I've seen it for 20 years, but it's more apparent in the Jerome Powell Fed, who said he was going to try and communicate better to the markets when he got appointed the first time.
All right. Well, thank you for taking this time out. Since you won't be on this afternoon, but it could be a quieter trading day today, just with the
Yeah.
elections, and then who knows when we're going to get the final results from everything.
Right. And I'm going to be, without going into too much detail, I'm going to be in a hotel on the other side of the state of Florida. So I will be able to check in from there unless there's some emergency that takes me away. So,
One final question from Sterling. Bob, there have
yeah.
been several people saying yields would come down in proportion with the size of Republicans' red wave. Why would a strong Republican showing cause bond buying?
So what it is, Sterling, is what we mentioned earlier. As fiscal spending grinds to a halt, it helps the future inflation picture because, as we all know, too many dollars in the system, too much spending drives inflation. That's why the Inflation Reduction Act is actually the Inflation Increasing Act because it's basically a big load of spending. I heard somebody say, yeah, there's a lot of spending, but it's very targeted. Well, does that mean that the money doesn't get into the economy? That's the dumbest thing I've ever heard. Anyway, if Republicans get in and we go to a situation of gridlock, in other words, nothing that the Republicans pass gets signed and nothing that the president wants to do gets through Congress, then you get less spending, less new laws, less new regs. Executive orders get overturned the next day, and there's no new spending to help spur inflation. Based off that, you can extrapolate out that going further out in duration, 10-year, 20-year, 30-year, inflation will be under control and the yields don't need to be as high. Remember, bonds are relative to what money's going to be worth. So, in other words, if you think a recession is coming, then you clearly don't think inflation is going to be a problem and therefore the yields go lower. But if you think inflation is still going to be a problem, if there's going to be stagflation, deflation or just inflation, okay, then you know that yields have to be higher in order for those yields to be worth anything. Recently on Treasury Direct, they were selling a 6-month I bond. The yield was 9%. And one of my friends calls like, 9%, why wouldn't I do that? I'm like, inflation's 8.4. So 9% is 0.6% of yield, especially over 6 months when inflation is not expected to fall much. Now, if that were a 9% 30-year, yeah, that's great. So anyway, I hope that explained it.
All right. Well, thank you for being here.
Yep.
We hopefully you can attend on Thursday afternoon. By the way, is there another tropical storm going to hit Florida?
Yeah, Tropical Storm Nicole was headed toward the East Coast, but actually my wife just told me this morning that it turned more towards Central Florida, but it was headed the cone was actually, the lower part of the cone was headed to Miami, and the upper part of the cone was sort of the Fort Lauderdale area. But now it's shifted up to where it looks like it's going to head toward Orlando, which isn't going to affect me much at all.
All right. Well, there goes my trip to Disney World. Ugh.
There you go, buddy.
All right. Thanks for being on, Bob. We hope to see you Thursday afternoon, and
Yep.
we will chat with you then. Thank you.
All right. See you guys.
Bye. All right, everybody. Okay, boy, I stirred up the hornet's nest with Elon. Got to pay attention to Bob when he's on here. Don't worry about Elon. All right, let's see. Let me jump to the spiders and the Qs real quick. Next key area. We're a little gap up besides if there's a gap fill, which actually would not potentially surprise me with a little pullback today, given we could go into a much choppier nature. There aren't a lot of stopping points above. Now, the key resistance was yesterday's close. You see here, breakdown zone, close right at that yesterday. So that's now support. So not only do you have the gap fill, you have just natural support resistance right at this 380 area. So key support 380. The first little target, do not ignore, since it could be a much choppier day, do not ignore 381.75. I'm just refining these for the nature of this choppier day, and then about 384. Again, targets the pullback 380, then 378. Just so happens they're round number targets today. So those are your short-term targets. For the Qs, we're going to gap up 269, which is a 50% harmonic, prior 50% harmonic. There's not a lot of stopping power in the Qs, so the next target is 272, 271.95. Key pullback besides your gap, which I'm bumping up this level just a hair to about 267.50 is your key support. And then below that, it would be 265.65. So those are your key levels. We already went through the S&P earlier when I started early. I'm going to reiterate, I'd be prepared for more of a choppier day. NASDAQ, this is not a double. Your major support's coming back at about 10,976 to 11,000. Your key resistance, 11,100, which we're trading against right now. Above there, this is a pretty big support resistance zone. Above there, do not ignore 11,180. Why am I giving closer levels today? Because, again, choppier potentially. And then we don't have much till about 11.3. Major support, as I said, 10,980 to 11,000. And then you got a lot of choppier. I'm bringing down this level to about 10,932. Just glancing at the VIX, rolling over again. Will be minorly choppy to bearish above 2480. We start dropping below 24 35. We'll be watching for the retest of Friday's lows right around that 24, and that would make me choppy bullish. BTC. BTC actually broke key support. It broke the pattern. We have what's going on with FTX, and FTX is getting in a lot of trouble. So this, yes, it broke out. This is a pretty reliable pattern, coming back and then broke down. I'm watching now. We could see some serious damage in Bitcoin. When the probabilities go to the minor probabilities with the breakdown, yeah, I'm watching for a potential turnaround and take out the other side. So yes, this was a bullish breakout on the short term. We stalled out at 21,450 area, and then, you know, FTX and their FTT token having problems, and we're getting a fair amount of damage in the crypto space right now. So I'm more watching for the other side breakdown at this point. Remember, overall, we are still in the trading range, and overall longer term favors the lower prices. And I saw the question earlier, my much longer term things, once we really break down below this 18,450, my major target area is 10 to 12. You are welcome for the levels on the cues. All right, so that's where we sit. What's going on with the FTX is critical right now. And you're going to see more and more stuff over the longer term blow up in the crypto market, especially when we get the next major leg down in the markets. With that, let me just peek at the open. Just peek at the open. Getting a little selling pressure. This is a very iffy. I would not be targeting this at 38.18 because of this little short-term ledge right in front of it. But 38.16, I'll watch for the bounce back and the rollover play. Looks like we're getting some selling pressure right in, but again, we can look with the tick. So the tick's still strong. Yeah, it gapped up in the key area, still strong. Unless I start seeing a shift in the tick much lower, I'm staying in choppier mode. We're just seeing a little breakdown play going in the open, but I need some confirmation with the broad market. Otherwise, we're testing the early morning lows, mid-morning session. So now if we bounce back and then roll over again, I'll use these key targets to the downside. With that, I will see everyone this afternoon. I have to jump right now. Talk to everyone later. Bye for now.